So welcome everybody. My name is Justin Norman. I'm the founder of The Flip. We're a podcast exploring contextually relevant insights from entrepreneurs around Africa. I'm also an investor in RallyCap, and together the two organizations are proud to have you join us for our second of what are hopefully many events exploring what's happening in the fintech space around the global South, not just around the African markets. And so we're really glad to have three seasoned fintech veterans and payments veterans from around the world, really, to join us to talk a little bit about peer-to-peer payments, and in particular, and somewhat provocatively, are we entering a new era for peer-to-peer payments? So I'd just like everyone to take 1 quick minute to introduce themselves, and then just to give your 2 cents very quickly on, do you think peer-to-peer fees are going to zero? And then we'll jump in a little bit more deeply. So ladies first. Nika, do you want to go first and just tell us a little bit about what you do at MFS Africa, and what you think about if peer-to-peer fees are going to zero?
Thank you, Justin and Hayden, for inviting me. This is Nika Naghavi. I'm the Director for Strategic Projects at MFS Africa. In my role, I identify and execute strategic initiatives aiming at sustaining and accelerating growth and entrenching MFS Africa as a key player in the payment ecosystem. I also support our CEO Dario Kuju in defining and refining the company strategy. So going to your question is, are we entering an era that P2P fees are going to be going down the route of being zero rated? It depends if you're talking about domestic versus cross-border. I think the end game for all of us here is that the fees will be zero rated and will cost as little as basically calling someone using WhatsApp. For instance, today I had a call with a few of the folks in Johannesburg from London. I didn't have to worry about the cost of that call, and this is where we should be headed at. Whether we're there or not, we're not there. The cost of sending remittances to Africa is the highest in all of the regions globally. It's around 8.2%. Also, when it comes to domestic remittances, now what we see on the mobile money side, there is a cost attached to it. So we're not there, but the end game should be that the cost of sending P2P, whether it's cross-border or whether it's domestic, should be zero. Thank you.
Thank you. Sid, do you want to go next?
Sure. My name is Sid. I'm the head of strategic finance at Wave. For those who haven't heard of Wave, we've been pretty stealth for a while, but essentially we're a full stack mobile money company operating in Francophone West Africa. As strategic finance, I work on things like partnerships, fundraising, M&A, et cetera. In terms of answering the question, in our markets, it's going to be a real slow burn down to zero. Cash is still king. Cash has a massive network effect. Agent networks are incredibly expensive to manage and scale. The in-person experience with paying for goods and services with cash is just still way better than what we can bring. So to answer your question, I think yes, but it's probably going to take a lot more, but probably before driverless cars.
Yeah. And you just mentioned in your market. So can you just also share what markets is Wave in currently?
Yeah, today we're in Senegal and Cote d'Ivoire. We've been in Senegal for 3 years and Cote d'Ivoire for about a year.
Thank you. And Dom, last but not least.
Yeah, thank you. So my name is Dom. I'm the co-founder of Minka. And just to go, you mentioned WhatsApp, and the vision when we started Minka was basically enabling money to move in real time. So I'm currently based in Colombia. And if I want to send a picture of my daughter to my parents in Croatia, I do it through WhatsApp. You only need a phone number. It's real time and it's zero cost. And currently, you mentioned cash agents in Colombia. It's $3 to $7 to send money through cash agents. The same was with the banks. So it took 1 to 3 days, $3 to $7. And you had a bunch of paperwork just for a P2P transfer. So we changed that. We're working directly with the automated clearinghouse, with the ACH. And we have 15 banks connected. All of them are providing the P2P service domestic for free. And so if you ask me, is it going to be free? It's already free here. We're just going to see the larger adoption in the next years.
Yeah. Thank you. And so I think just to start, a bit of housekeeping I should have mentioned at the beginning. Please fire away any questions in the chat to us at any point in time. We'd like to make this an interactive thing. And same to you, the panelists. If you have any questions for each other, feel free to jump in, and Hayden as well. Just for a bit of background, I mean, Hayden and I, in discussing what topics we were interested in exploring, are really interested in what's happening in the peer-to-peer space, and certainly from an African perspective. And Sid mentioned it, and MFS Africa talks a lot about it as well, as of this competition being with cash. And our goal obviously is to digitize payments, but there's a lot of sort of infrastructural challenges that need to be overcome. And so I think I'd like to start just by talking about infrastructure first. And Nika, your old job was at the GSMA, and they just came out with their annual report on the state of the mobile money industry. And just, a couple of things that stood out to me. You had, or not you, but the GSMA had, talking about the number of mobile money providers per country, and some African countries was over 5 per country. And then, just on the topic of fees, it was still that 87% of mobile money revenue sources were consumer fees. So I think in light of what's happening on the continent with a lot of peer-to-peer providers coming in and trying to offer free fees, but then the mobile money and the telcos still being really bound to fees, we wanted to sort of interrogate this topic a little bit further. And so I'd love to talk. All three of you are sort of quite nicely positioned in different parts of the value chain. I'd like to talk specifically about MFS Africa. You guys also just announced, I think it was yesterday, that now you're making over 300 million mobile wallets interoperable
I think
across the
actually I
continent.
just remembered in my intro, I forgot to say what MFS Africa does. I thought that everyone probably have read.
Yeah. So if you want to go for it, I mean, let's talk a little bit in the context of infrastructure, and in the context of, making peer-to-peer payments interoperable. Can you talk a little bit about what is it that MFS Africa is focused on today? I know it's been a 10-year journey, but today and in your new role, what is it that you're focused on?
So basically, MFS Africa is a Pan-African fintech company which operates the largest digital payments hub on the continent. We started in 2010, and our ambition all along the way was to empower African businesses and consumers by connecting them to the digital and global economy. So back then in 2010, when we started, the immediate pain point in the industry was the fragmentation and lack of interoperability between mobile money providers across borders. And since then, if you look at our journey and trajectory, we have played our part as the ecosystem enablers and orchestrator, and extended access to life-enhancing services across borders. So as you mentioned, I'm really excited to share that we now have more than 320 million mobile money accounts on our platform, which basically looking at GSMA Sotier data means that we're covering 60% of all mobile money wallets in Africa. So this means that through our work, these accounts will be able to exchange value between each other and also to the rest of the world, the same way that me and you can send WhatsApps to each other. And going back to Sotier, going back to MFS, and before I start with Sotier and why we still see customer fees being the dominant driver of the revenue for MNOs. So our ethos at the MFS Africa is going to be the same. We're committed to empower businesses and consumers within Africa and connect them to the digital and global economy. Obviously, our recent acquisition of Bionic in 2010 means that we are deepening our presence in the payments ecosystem within Africa. And we're focusing on cross-border trade and basically empowering more Africans to be able to trade with each other. A lot of these, we've realized a lot of these remittances are being used for exchange of goods and services across border. So now with the acquisition of Bionic, we'll be able to move one level deeper. So what we saw from Sotier, which was launched last week, was that once again, Africa really cemented its position as the leader in the mobile money world. Out of the 300 million active mobile money accounts, 160 million of them are in Africa. But what's more interesting is that the region is processing 65% of the annual mobile money transactions globally. So marrying that with what I mentioned earlier, it means that we are in a strong position to make all of the promises and the goals that we've had a reality when we are doing that today. So going back to cost of P2P and why is it not free today and why MNOs charge a fee. I'm going to explain why, but I don't think the justification is there personally. So basically, business model of MNOs and their license is very different from banks. So banks really rely on interest that they earn on all of the basically balances that they hold and how much they earn on the basically they charge on the loans and how much they basically pay on saving interest on the savings accounts. So MNOs can't really intermediate funds. So their business model is entirely different and is tied to the movement of value. So it means that ultimately transaction fees is the main driver of their revenue. But that doesn't justify the fees that we see today, and that doesn't justify that charge that majority of their revenues are coming from these customer fees. Because it's all about business model innovation and breadth and scale of services that you offer on your offer to consumers on your platforms. If they change it and if they push the fees to transactions that are off the platform, they will have a different business model altogether. So for instance, one of the services that comes to mind is ZAD in Somaliland, which they started with zero-rated P2P transactions and merchant payments. And they're one of the success stories in the mobile money world, but they have a completely different business model from the rest of MNOs. If you look at Alipay and the rest, they don't charge anything on P2P. Obviously, you can argue that their business model is different. They don't digitize cash. But I feel like cost of digitizing cash, which is huge still in Africa because we're in a cash-based economy, it doesn't justify for a business model that is not well thought, because you can move that to any transaction that requires you to basically convert digital money to cash again, or for digitizing cash. But anything else that stays on your platform, whether it's ecosystem transactions, school fees, bill payments, merchant payments, etc., all of those should be zero rated. And it's going to be commoditized at one point, whether it's through competition or whether it's through better thinking about the business models.
Yeah, and that's maybe a perfect segue to ask a question of you, Sid. Obviously, rethinking business models and building infrastructure from the ground up is kind of what Wave is doing in Senegal and then in Cote d'Ivoire. So, is it fair to say, or can you share a little bit about is that the strategy that you've employed, is to say, because MNOs are a different type of business, we're going to try to use Wave's words, reinvent mobile money in Senegal? And can you talk a little bit about the sort of strategy behind all of that?
Yeah, 100%. So let me just touch on something that Nika brought up, which is, I think MFS has been trying to solve this interoperability problem between all these kind of disparate MNOs and mobile wallets, et cetera. We are tackling the same problem in just a different way. We built Wave to be interoperable by design, right? If you look at the kind of the existing telco infrastructure, if you are part of a certain telco, you can only really sign up for their own mobile money service, which means by default, you have kind of these disparate services that need to be put together. When we built Wave is built interoperable by design, in that anybody can go open a Wave account. It doesn't matter if you're Telcom, MTN, Orange, or Safaricom, Airtel, et cetera. You can open a Wave account seamlessly and send money to anybody. So we think this is the future of kind of interoperability. It's just far more efficient because you don't have to go through kind of all the kind of effort that you have to build systems that are interoperable and kind of talk to each other. And you also get kind of lower fees and costs by definition because you don't have all these kind of intermediaries in the middle, right? So I think the vision is the same. The approach is a little bit different. I'd say, I think what's really unique about Wave, especially kind of a quick advertisement in Senegal and Cote d'Ivoire, is because we have our own agent network, which is, I think, quite unique. and sort of compete sort of head to head with some of the telco operated mobile money companies, we can kind of shake things up, full stack from cradle to grave, because we own the end-to-end experience. So kind of the analogy that I kind of draw is sort of like Netflix going into content and kind of owning that entire infrastructure. That's the right way to kind of create that full user experience and kind of drive costs down. Our P2P, as Nika said, we still, because of the large kind of transactional nature, because of licensing, et cetera, we still charge for P2P today, but we do it at sort of cost plus to the agent network, and we can build our agent network from first principles, et cetera, with kind of better tech, which can reduce cost and better efficiency. Kind of the Uber driver analogy, which is that we can pay less per transaction but drive a ton more volume to get kind of the overall IRR still profitable for kind of every specific agent. But with that specific per unit efficiency, you can drive down cost, and with technology and compliance, drive down cost to sort of reduce that P2P fee to be as competitive as possible. But yeah, I think we saw that there was a kind of an opportunity here that I think was it's kind of your margin is our opportunity, right? And I think that's kind of what we're trying to capitalize on with Wave.
Sorry, I was just trying to unmute myself. Yeah, and I saw that Wave is now moving 3%. You said 3% of Senegal's GDP, and I'd have to imagine that just that full stack approach and the ability to reduce fees is a large reason why people are using you as opposed to Orange or other legacy mobile money institutions. Is that correct?
Yeah, I think that's right. I think we're a lot more than 3% of GDP now, but I think people viscerally don't like cash out fees. I think it's kind of like the old free checking, or like when you had to pay $5 a month for your checking account, et cetera. Kind of what Equity Bank kind of shook up that kind of the banking market in Kenya. In the US, kind of all the neobanks and Europe have done it. I think cash out fee is just kind of a visceral thing that people hate, and I think when you can make that zero, I think that talks to people, right? So I think that's been a big part. We still charge, but we charge for the actual kind of P2P, but you correlate it to kind of what the value is, right? The value to somebody is that they can send money to a different part of the country for 1%. There's not really any value to, I think, being able to actually access your own cash that's yours, that you've kind of worked hard to deposit.
Yeah, absolutely. And
so
sticking
I just
on,
wanted to
go on.
clarify one thing. So you guys don't charge, because I looked at the business model a few times. You guys don't charge on P2P, but you charge on cash out fees.
It's the opposite. We don't charge on cash out fee. Yeah.
So, but in terms of like the cost to business, obviously cash out has a cost to you guys rather than the P2P because it's on your platforms. You don't have to
that's
do
right.
a lot in like moving the money. Okay.
Yeah, that's right. So, but we still run kind of a positive contribution margin business because we still charge for the P2P, which still can be kind of, greater than the commissions that are paid. But you're right. The running the agent network, building that out is hard and expensive, and kind of has a variable cost to it, which is kind of gets to the point of around P2P fees won't truly go to zero unless you can kind of get that agent commission out, and you can kind of do that by having people kind of reduce the amount that they cash out and kind of have more value added services. But then you get into some of the, I think, other things we're going to discuss, like kind of licensing, et cetera, right? Because if you want to do kind of more nifty things on a payment platform, you need to seek kind of all the licensing that goes around with it, which takes time and complexity and engagement.
Okay, and can I ask how much you're charging for P2P, like for fees? Sorry, Justin, for stealing your show.
No, it's 1% to send money to any phone number in the country.
So I'm gonna go on mute now, Justin. Sorry.
I'm happy to. If you have any other questions, you're making my job much easier. But staying on the topic of infrastructure, but maybe moving away from agent networks just for a minute. Dom, to go over to you next, obviously, behind the scenes, money moving in a ledger, instant payment, real-time peer-to-peer payments. That's what Mink is doing. You're taking the approach of working directly with, I believe it's the Central Bank of Colombia, and building sort of the ledger infrastructure from the ground up. So, can you just talk a little bit about, especially in the context of fees and all that we're talking about, and interoperability and money actually moving real time, real time settlement. Can you talk a little bit about what you guys are doing and maybe how that will impact all that we're talking about from a peer-to-peer perspective, from a fees perspective, and so on?
Yeah, I think it's a great question. Maybe just to draw a parallel between Colombia and a lot of the countries in Latin America and Africa. So the cash usage is very high here. So it's around 85% of all transactions made in the country are still made in cash. So cash is also king in Colombia. And maybe the bit of a difference when you see the markets in Africa and Latin America is that mobile network operators didn't go into the mobile money space. It was basically the cash agents and neobanks who are now competing with the banks and the cash agents themselves. No, so the vision that we had and where we started is that 85% of the transactions are still made in cash. How do we compete with cash? So if cash is free, real time, and you basically anonymous, you need to build something that is similar to that. And that was the challenge from the central bank, who assigned it to the national clearinghouse. And the original idea of the project was to enable peer-to-peer payments in real time using any kind of issuer. So you can be a licensed bank, you can be a wallet operator, and the plan for this year is to expand it fully, which means to include also cash agents, ATMs. So any means of you exchanging cash to this digital version, or basically it's a stable coin here. You can do it. The idea is that you can do it with any kind of exchange or means. So when you go to the fees, of course, there was a lot of pushback. Large part of the income for the banks is transactional fees. But the idea was not to compete with the cards, which have a low penetration, or alternative payment methods, but basically to compete with cash. So P2P is right now subsidized. So basically, everyone in the country can send money between any institution in the country without any fees. And the long-term idea, and what we're basically launching right now, is that we will enable micropayments and request for pay, which is basically collection, to be charged to the merchants who are willing to do that. So it's very similar to basically UPI in India. I think they're still deciding what will be the model, but most likely it will go in the same direction. So P2P is free, and then merchants and big companies doing collection will be the ones who pay for the service.
I'm just going to ask you a follow-up question, and we actually have a question from Mark in the audience about blockchain, and especially in light of the Visa announcement with USDC, and you just mentioned a stable coin earlier. Can you speak a little bit to that? I'd love to get your perspective just on where blockchain fits into all of this stuff that we're talking about.
Yeah, so we are still in stealth mode, and when we started the project, we mentioned the word Bitcoin 3 years ago by accident in one of the meetings with the banks, and 2 of the 10 banks that were present just left the meeting. So it was a very different environment 3 years ago and than it is right now. Where the blockchain fits, we use a lot of the concepts that I can say it's blockchain. At the base principle, the way that it functions in Colombia is that the banks put a deposit in the central bank. And for the deposit that they exchange, we have a stable coin, which we call TIN, which is basically 1-to-1 with the Colombian peso. So a lot of the news and the things that you see like building up, I think it's the easy way to use the technology to simplify settlement and clearing, because what you get in this model is real-time information about how much banks owe to each other, how much users owe to each other. So that's one of the concepts. And the other one is we use basically the same cryptography as the Bitcoin network. So it's fully compatible. And the long-term vision for us is that slowly, like a Trojan horse, we include crypto to all the participants in the system. That's maybe the long-term plan, like if you look at 2-3 years out.
And so obviously, crypto is exciting for so many reasons. Real-time settlements and interoperability obviously being a big one. And so just sticking on the sort of interoperability theme, I'm curious, I think, Sid, I'll start with you. Hayden and I were talking yesterday, and we asked each other a really interesting question, which was to say, as a service like Wave thinks about interoperability, who do you need to be interoperable with? or is it just that for now, just being able to have, readily available cash out is the most important? But do you need to be directly interoperable with, Orange and other telcos? Do you need to be directly interoperable with a remittance provider? Or is that not actually that important because MFS Africa exists and can patch everything up because, make the integrations easier for everyone else?
Yeah, I think it's an interesting philosophical question. I think the way we think about it is, at least domestically, our view is we're happy to be interoperable with others, but our cash out fees are, as I said, are zero. So interoperability in some ways will just kind of benefit us, right? Because you'll kind of want to move more money into our systems, et cetera. And because everybody can kind of open a Wave account kind of really, really quickly, and we have both an online and an offline experience, we have a smartphone app for those that are kind of more digital, and then we have a QR card, which is kind of our equivalent of the USSD for those that don't have smartphones. So we think by definition, at least domestically, we don't necessarily require interoperability. It's kind of like in the US, for those who are familiar, if you have a Venmo account, Venmo and Square Cash aren't necessarily interoperable, and nobody's really kind of yearning for that, right? But with the telco space, if in a lot of markets, especially like Tanzania, where you have 5 different mobile money operators, it's important because you have kind of many different users that need to be connected, and there's a clear use case. Versus for Wave in our markets, we built the system to be interoperable. Now, for international remittances or for money, I think moving cross borders, I think there is value to connecting to sort of aggregators or things that make it more interoperable. I think the speed at which you could kind of distribute the services, I think creates that case for it. And also just sort of the bringing the cost down, right? Having others that have kind of built the compliance and all the other kind of onboarding that comes along with it, and kind of riding on kind of licenses in markets that we don't have it. I think that's valuable. So I think kind of where we probably come to is kind of domestically, we don't believe it's required. Happy to do it if it's required from a regulatory perspective, but for kind of cross-border flows, we think that's kind of generally like a good idea to kind of aggregate into other systems.
And Nika, what's your take? I also saw in the GSMA report, in the State of the Mobile Money report, it said something about account-to-account transfers across different providers are something like only 5%. And so I wonder if we're overstating it from a use case perspective, or if it's that low just because it's otherwise cumbersome. Does it matter just because, to Sid's point, from a cost perspective, in particular, what are you seeing on your side?
Domestic interoperability between mobile money providers we see a lot of, we've seen a lot of growth in that compared to early days. But obviously these systems were designed as closed loop, and they were not talking to each other. And a lot of it was the strategy that telcos had at market level, that one player was the dominant one, and they didn't want to share their basically pie with anyone else, and they didn't want to interoperate with others. But that has changed. They have realized, most of them, that there is a value in being interoperable at the domestic level, but still the numbers are very low. So 1 in 20 P2P transactions are interoperable domestically. And when you look at those flow charts, yes, you're right. I think it's less than 5%. It's in the region of like 2 or 3%, if I'm not mistaken. Mainly it's the strategy that they drive domestically. It is cumbersome if the market is not ready. If you're a new provider and you have to really focus on building your agent network, building your business, and then the regulator is mandating you to connect to 5 other mobile money providers, or to the bank, or to the central switch, then you have to go through all the cost and design of that system. But mainly, I think it was a strategy that providers had early on. And it's something, interoperability is something that has to be market-led, and the decision should be at the market level as well.
So Nika, are customers actually charged more to send to a different operator, or are pricing regulated
So the pricing is depends on different agreements that they have sometimes bilaterally, whether sender pays or the receiver pays. But I think I believe the uplift this year in interoperable transactions was that there was a transaction fee waiver. And because these transactions were not mirroring the domestic, mirroring the on-net P2P transactions, mostly people were having 50 different SIM cards to just hack the system. And then when they zero rated the transactions, they saw an uplift in interoperable transactions. So the pricing is really important as well. And what we've seen in most markets is that it's not mirroring on it P2P.
And Nika, I want to ask you a follow-up question because you mentioned the regulators as well and things needing to be market-led. And can you speak to, and maybe this will be a question for Dom as well, but what Minka is doing is sort of, regulator-led in that they have the backing of the government to institute this, nationwide clearinghouse. And there's also a question here from Rob with LACCAP about to what extent does peer-to-peer scale require adoption from legacy financial service providers? I guess regulators would also be a part of that question as well. Can you speak to that? I mean, what role do they play in, and what are they thinking about, I guess, in this context?
So I think a great example to answer Rob's question, a great example is Kenya. So Kenya was a market that domestic P2P from legacy perspective wasn't scaling. We were talking about early 2007 when M-Pesa started with a sending money back home slogan. And it really helped. And the regulator didn't stop it. They had a very open approach to M-Pesa in generally in tiered KYC approach, etc. And that was a watershed moment for the mobile money industry. So I don't agree entirely on the enterprise solutions and the legacy banking solutions and P2P being part of the DNA of a market for it to really scale towards either mobile money or mobile wallets or fintechs such as Wave. It's all about finding that hook product and really addressing the needs of the market. And that was at the time in Kenya, sending money from Nairobi to Naivasha was the use case that they pinpointed and found out. But success of mobile money generally or any other fintech or innovation depends on the openness of regulators to really trial and basically look at different models and have sandboxes to embrace innovation. And if you look at, there's something that GSMA used to do and every year does, it's called mobile money regulatory index. I feel like I'm presenting GSMA today, but that's not the case. So if you look at that and you look at the uptake of mobile money in different markets will have a high score in that index are the markets that mobile money is thriving. So markets that you can offer tiered KYC, you need lower balances as a provider, etc. So regulators play a key role and their openness to trial. But obviously, maybe passing this to Dom, there is a lot of skepticism, whether it's stablecoin or whether it's not on crypto or anything, even distributed ledger technology being implied in anywhere in the value chain. So it's good to hear his thoughts as well.
Yeah. And that's a perfect set. Yeah, go on, Dama. I want to ask you, what are the regulators saying to you, other governments? What are they saying about things like stablecoins and crypto as well, in your experience?
Yeah, I mean, we usually avoid that topic because I think the what you mentioned is interesting because there are countries who did it top down. And I think even M-Pesa in Kenya is one example where they had the support from the regulator. It was a private initiative, but then you have India and you have now Brazil, which basically set the stage for any player who wants to participate in the system and really did a good regulation and opened the system to everyone. And usually in those countries, transactions and P2P is free. I think that those are very rare exceptions because most of the countries, what's going to be happening and what is happening, that you're basically building bottom up. And although we have the approval from the regulator, what we're doing in Colombia is bottom up, which means that basically we connected enough financial institutions to have 80% of the access to the accounts. And I think there will be an opportunity for private players. I think all across Africa, Southeast Asia, and Latin America, who will build those networks, because there's two things that are interesting about payments. First, all the financial institutions are like ecosystems, not ecosystems, so they're completely closed loop, and opening them up is a nightmare. And basically thinking that regulation or some kind of let's say standard regulation like in Europe will do it, it's not the case. So they need to have interest, and there will be private institutions who will be building it from bottom up. And second thing is that currently the technical stack of payments, I think I mentioned this, but it's like an onion, like you peel it, and the more you go down, the more complex, the more you cry. So using even the MNO platforms and Visa and MasterCard and the existing networks, they're just too outdated to build something which is a fully transparent and an open ecosystem. So I do believe that most of the world will not have a top-down approach, and will need private institutions and someone who will step in and build that last mile rails.
Sid and Nika, I'd be interested in having you comment on that. Maybe Sid, you first, because Wave is sort of an outlier, I suspect, in that you're going head to head with these otherwise legacy mobile money providers. And so I would have to imagine you agree that you can take a bottom up approach and build your own agent network, and that all of this is possible. But I'd love to get your perspective on some of what Dom just said, especially.
Yeah, I mean, I think what we're doing is sort of just incredibly unique, right? And sort of, I think, a level of ambition that I think at least I hadn't seen on the continent before in payments, et cetera. But also comes with, I think, a unique set of risks as well, right? I think sort of the way I see it is, I think payments requires network effects in a way. I thought, your point on the ecosystems was spot on, right? But payments it just requires a network effect, right? Because you need to be able to pay anybody. But kind of the telco services, because of kind of early interoperability, et cetera, like you kind of had that network effect, right? So you kind of didn't need to kind of be the default for kind of everybody in a market to use, versus payments, just like the user experience just gets 10x and 100x when everybody in a country kind of uses it, whether it be Paytm or Venmo or Cash App or, M-Pesa or, Revolut Monzo or, and I think we're so far away from kind of having, getting to kind of interoperability in payments and deep network effects, that I think that's incredibly paramount for us, right? And from a regulatory perspective, that's a challenge, and we are kind of working with bank partners, et cetera, that kind of help kind of propel our cause. Sorry, I don't know if this kind of directly kind of answers the question, but it's just like, it's incredibly important for us to kind of just continue to kind of tout the interoperability of our service, right? Which is, I think, kind of just, I think, very, very unique. Look, my general philosophy in this is, I think different models will work, right? It's whatever kind of the team whatever respective team wants to kind of focus on, and what their benefits are. For us, again, another quick advertisement on Wave. For us, like, this is sort of our mission, is to build something that's incredibly interoperable and kind of get to kind of huge scale. So for us, this kind of model works, but kind of other models, can work as well, depending on the market. It just needs to be tailored specifically for the market and the regulations and the infrastructure that exists in that market, right? I think you can't do a one size fits all in payments. It has to be tailored to the specific ecosystem that you're in.
And Nika, did you want to add anything to that, to this question about bottom up or top down?
Adding on something, because we have a different model, obviously. We're dealing with cross-border remittances, and there is still, even with prevalence of mobile money, there is still a very little knowledge on how things work outside that regulatory body that you talk to. For instance, domestically, they might not even know how mobile money works. So when you look at the Pan-African play, obviously there is a lot of huge untapped potential, whether it's cross-border trade or cross-border remittances. And going back to how, for instance, we keep talking about Kenya and how it really worked, it's all about having the level playing field and encouraging competition. And obviously in Kenya, they gave the license to non-financial institutions, and they started scaling the service. But then the same principle should be applied to fintech players and etc. who want to really enter the cross-border remittances space. So the more competition you have, the more the price will go down. Because a lot of corridors, I remember a few corridors between Burkina and Cote d'Ivoire, when they opened within Orange services, what we saw was that the price of the competitor MTOs were dropped by 60% overnight. So competition is really, really key. So having establishing an open and level playing field when it comes to that is very important. But the second most important part is that a lot of these cross-border payments that we're dealing with are in basically $100 category, and having a tiered based approach when it comes to KYC is huge if you want to unlock the potential of either cross-border or remittances or trade. Especially in a lot of markets, the documentation, there's a there is a gap in KYC and documentation available to users. The other thing that I think will really help move the needle is that, for instance, today, if you're an MTO in the EU, you can passport your license and operate across the EU. We don't see regional licensing happening in Africa right now, currently, and that really will push the needle and move the needle forward and making things more interoperable across borders, encouraging trade across borders and remittances. And maybe one last thing is that, for instance, we have all of this influx of startups, etc. Some of them have their basically infrastructure in the cloud somewhere else. So we see a lot of like data localization and infrastructure localization laws being in place across Africa. So that would really hinder innovation across borders, across sectors, and will really stop participation from a lot of innovators across the market. So that would be my maybe four key points on regulations. I don't know whether it's bottom up or top down.
Sid, go for it. You have something to say?
Yeah, Nika, I had a question more out of curiosity. How big is cross-border? Because you hear, I always read in the press about cross-border in a way that I don't read about mobile money. And I'm just curious. I always thought mobile money is sort of 100x times bigger market. But why is it that cross-border kind of remittances gets a lot of press? Is it just a much bigger market than we think? But yeah, I'm just curious from, you have that really like a bird's eye view into this market. I think you're on mute.
I'm on mute. So the African diaspora, they send around like $40 to $50 billion a year into Africa. So in a lot of markets, when you look at the percentage of remittances relevant to the GDP, you're looking at 20% plus. So somewhere like Gambia, if you look at the data that is from the central bank, which is much more accurate than the World Bank data, that is around 50% of the GDP, around 550 million. So a small market like that attracts that much basically money being sent home. So the diaspora community really, really contribute to the well-being and livelihood of their families back home.
Yeah, I agree for, the markets like Liberia, Gambia, definitely. But like all the other bigger markets, remittances are like 2 to 5%, I think. It's the one thing that's always
like if you're looking from a very small market to another one. I think a lot of it there is, I was having a chat about this internally the other day. There is a lack of like good data on cross-border remittances within Africa, because half of the time what we saw, for instance, when MNOs were opening up the corridor, what they were like Orange was doing in a small corridor was 3 times the estimates of the World Bank. So a lot of it is happening informal. There are no good estimates on what percentage of what we see reported by the Nomad and World Bank team, how much we can add on top of that to say this is the informal remittances, whether it's inter or intra-African. So I think one thing maybe we can call out today is better data, capturing better data on cross-border remittances within Africa.
Yeah, sorry, I'll say one final thing, which is, I think I'll end with some controversy as well. I mean, I just think remittances are great, but I think it's a bit of a feel-good story. I think mobile money domestically is like 100x bigger opportunity, and I think part of why it's not talked about as much is it's just kind of less understood, right? Like you kind of just have to be in the continent, in the trenches to understand cash in, cash out, which like you could never really explain to somebody that like uses Venmo in America, right? Like what is cash in, cash out, et cetera. So that's my view.
Sid, I'll add that when I was at Facebook on the Novi team and working on like Libra expansion plans and looking at some of these like, domestic P2P markets to try to size them, it was just impossible from afar to get any sense of like the money actually moving within borders. And to Nika's point, of course, like some of these smaller corridors, like obviously you have to factor in all the informal flows. But domestically, like until somebody goes in and builds it like a telco or Wave, it's just there's no numbers out there.
Yeah, good point.
In the past or in the last few minutes that we have, we have some questions I want to try to get to, and Sid, I may actually be coming right back to you. And apologies, Dom. I know you've been sitting quietly for a while, but there are some questions about usage of mobile wallets versus cash or customers cashing out directly, and then also asking about merchant networks. And so to your point about just agents on the ground. About managing liquidity, especially in the context of things like financial inclusion and rural areas and all of the things that it takes to manage an agent. I think it is an interesting point that like in the context of these markets that we're talking about, cash in, cash out in this physical infrastructure cannot be overlooked. So can you speak a little bit to that in terms of, I mean, you talked a little bit earlier about the importance of agent networks, but there's even a related question here about payments exclusively focusing on infrastructure versus foregoing the costlier agent customer facing layer. What's your take on all of that and how Wave sees that and is managing all of that and building your business accordingly?
Yeah, look, without divulging into too much secret sauce, our agent network is the equivalent of Amazon's like warehousing system, right? Like it is the hardest work that we do. It's the largest group of engineers and product managers. It is the largest kind of on the ground team focusing on kind of quality, compliance, et cetera. And just, yeah, it's large. Managing liquidity requires an incredible, robust understanding of how money moves, how the banking system operates, including how to safely get physical cash into kind of very rural areas. Including like getting a motorbike on a raft, like to cross like a river to get to an agent, right? So this is like incredibly hard It's a logistical problem and a technology problem, right? And a compliance problem. So that is the thing that we work, incredibly hard on. I think on the merchant piece, what I'll say is the merchant piece is hard because, in the markets we operate, at least, there's not a ton of e-commerce yet. It's growing, but you have to get the kind of the physical merchant experience, which like you're competing against cash, which has a massive, network effect, right? So we're confident we can build the merchant piece, but you have to kind of layer it on after you have sort of the customers on board on the issuing side, kind of just figuring out that like there's a cheaper way to actually like pay cash in, cash out. So I think we're focused kind of very, very sequentially on this. But yeah, the agent network piece I think is the part that's I think least understood because it's like hard, right? And it's like the hard things about hard things is that it's just really freaking hard.
And can I jump in real quick? Like, so Sid, I think like for mobile money agent network management, like the hard thing that you guys are like the hardest part of the hard thing that you guys are tackling, like this whole issue of like liquidity management across these like disparate folks across borders and everything is hugely expensive, right? And a lot of times you realize like managing an agent network is like managing cash, which has a huge kind of cost component to it, and then moving liquidity around all these agent networks as well. I'm curious if we can do a little bit of matchmaking in real time here, because I know that Dom's platform in Colombia solves a lot of pain points around liquidity management as a ledger for cash networks, and is even considering, what does a potential Africa future for Minka look like? So Dom, would love to hear from your perspective, I guess, a little bit of like how you're seeing agent networks adopt your technology to lower the cost of managing cash and then streamline liquidity at the last mile.
Yeah, no, I have to just agree with Sid. I think the hardest thing to do is basically managing the actual cash agents, and I mean here in Colombia, like I mentioned, most of the transactions are done through cash agents. I think the bill payments is around 98% is done through cash agents, which is kind of absurd with the whole banking system existing. So what we did now, like we realized that the clearinghouse and the problem of doing P2P is basically problem of managing liquidity and real-time clearing. And it's a very similar problem you have when you're managing cash agents. So how do you optimize like the balances on one side, the cash availability from one agent to another? So our dear clients or partners are basically clearinghouses and cash agents. So I would be available just to maybe exchange ideas and how we set it up for a few of the cash agents in Colombia. If there's anything of use, either ideas or technology to see to and wave. Would be great to exchange ideas maybe after the call.
Sid's going to have a lot of follow-up calls after. I think Sid and Nika are going to have to grab a coffee in London as well. So just
For sure.
Just the power of the Rally Cap platform. So I think we have just a couple of minutes left. Maybe we can just go around the horn and share some closing thoughts. And apologies to some folks in the audience whose questions we didn't get to. I'm sure any of the speakers are keen to engage further. But Nika, do you have any sort of closing thoughts or anything? I like to, when I do podcast interviews, for example, ask a purposely broad question, which is like, do you wish to see something that doesn't yet exist or some change in the ecosystem? Anything that's a particular pain point for you in particular, MFS Africa? Your closing statement doesn't necessarily have to be that, but just as a prompt, I'll mention that, and then we'll go to Sid and Dom next.
That's a very tough one. So that's a very tough one. I think going back to what Sid and basically Dom were mentioning and the issues around liquidity, I think we don't see liquidity management. If we don't see enough innovation around liquidity management and tech startups that really manage that, we've seen a lot of like startups working on the delivering FMCG products to micro SMEs. But there is maybe one or two who are working on liquidity management and being agnostic to providers. For instance, I'm sure that if Wave knew that there is a startup that can manage liquidity in certain areas of like Senegal or Cote d'Ivoire for them, they would leverage that basically startup. So if the ultimate enemy is cash and we're all basically working towards eradicating cash and digitizing everything, that is where the gap that I see currently in Africa. So I'm going to close it with that.
Thank you. Sid, do you want to go next?
Yeah, look, I'll say, look, we didn't build Wave to be an infrastructure company, right? We wanted it to be like a true technology company, and like we wanted to build all the cool front end stuff. And then when we realized how broken the existing infrastructure was in terms of like Senegal doesn't have like a switch the way you have NIBs in Nigeria, et cetera. That's not as effective and efficient. That creates a lot of dependencies sort of for us, right? So we had to go build kind of, we had to reinvent the agent network and kind of the movement of money, et cetera. And so what I'd say is it would be like, if there was a magic wand that I could wave, like I think better infrastructure for banking and for, I think more regulatory frameworks for kind of licensing that can help the backbone of the infrastructure actually can help a lot of the fintechs actually thrive and do the work that they kind of want to do, right? So I think there's a massive room for, I think, tons of players building, better infrastructure, I think, for banks, switches, et cetera, that I think can then help all the companies that are kind of more either upstream or downstream, right? I think that this is sort of, as I said, we had to go become this infrastructure company because that didn't quite exist in these markets, and was sort of a discovery, and I'm sure as we go to kind of more markets, there hopefully others will come and kind of build some of that stuff for us, or we're happy to kind of get our knees dirty and go build it ourselves.
Thanks, Sid. Dom?
Yeah, I have to agree. I think that the biggest challenge is the infrastructure. A lot of the people who think of payments think like everything's done and things might be half working in the US or maybe now India. But when you look at most of the world, like the payments are broken, and there's so many cool and interesting things to do in the next year that I think it's probably the most exciting space when you take those kind of markets. So from the base layer, you have changes in the way central banks work, what is base money, up to the layer 2, layer 3, like everything is being rebuilt in the next 5 to 10 years. So I think it's a very exciting space and a very good space to be in. And I think both the projects are very interesting, and thank Nika, Sid, and Justin and Hayden for the invitation.
Hayden, do you have any last words as well? And then we can wrap up there. Maybe something on behalf of RallyCap as well.
No, I know we're at time. So just, yeah, huge thanks to everybody for taking an hour of your day, speakers, hosts, panelists, everybody. We can follow up with a bunch of the questions that weren't addressed here on Twitter. And Justin and I also like compose this bit of a summary to share out via the flip at some point. So yeah, looking forward to more of these events and always open to ideas for what we discuss next.
Yeah, please. And please let us know for those who are still here, what else would you like to see us explore? So, you know, very much the thesis of RallyCap is also connecting what's happening in the fintech space across different markets, Latin America and Africa, and increasingly Southeast Asia as well. So, you know, we're really excited to have conversations across the global South like this. And if there's specific topics you'd like to see explored, let Hayden or I know, and we'll try to make it happen. Cool. Well, thanks everybody. We really appreciate it. We will send out this recording shortly, and have a great rest of the day further.
Thanks everybody.
Thank you.
Thank you.
Thank you so much.
Pleasure talking to you.